Hello traders, Gary Wagner here, just about 12:30 in Honolulu, 5:30 in New York. It is Wednesday, February 7th, 2018, and this is the Daily Report for Gold and Silver. A dynamically strong U.S. dollar takes the precious metals pricing lower, with gold trading down about $8.90 on the close, 1320.60. That's after trading to an intraday low of about 1313. Silver also trading under pressure, losing about 26 cents on the day, 1632 closing price basis March futures. When we look at the dollar has had a nice pop to the upside over the last couple of weeks, gaining about 0.75% today, closing above 90 for the first time in quite some time, 90.17 in terms of the dollar index. Now, quiet action as the U.S. equities markets attempts to settle down and find some footing. Dow Jones Industrial Average actually closing down about 20 points at 20,893. And it does appear as though Bitcoin might have found support over the last couple of days because it traded to a low of 6,000, which is the lowest price it has traded to since it opened on the futures exchange, and bounced off of that. Currently trading at 80.60 with the CBOE and 81.60 in the CME's futures contract. Although gold pricing is trading lower on the day, $10.50 lower actually at $13.19.10, we might have seen the first signs of a potential pivot or bottom in this most recent decline. We hit a low this morning of about $13.13. And when we look at this very, very short-term chart, we can see that the market has been definitely characterized by predominant selling in the market ever since hitting these highs at 1350. And as a technician, the way we can easily discern that is simply look at the highs and the lows, and then the next series of highs and the next series of lows. And what we can see is that we've had a series of lower lows and lower highs. So although we've had this move off of these recent lows in the market, we can say that we've seen the first signs of it, but we won't get any kind of real definitive technical confirmation until we get a higher high and a higher low than these two previous marks. In other words, the market has got to definitively trade above 1334, and this low has to be above the current low at 1313. But what we can say is that we are seeing the first signs of recovery. The question is it a short-term recovery, as we saw here, in which the market was trading at roughly 1320, trades to 1334, but then returns to a downward trend and exhibits a lower low on this particular sell-off. So while we are neutral in the market with no active trades, we want to look to see how gold reacts over the next couple of days. And traders, to get a real sense of where this market is going, we have to look, of course, at longer term charts and look at different levels in which we could see tentative support. We have the level of a 38% retracement at 1317. We're currently trading at 1319. Of course, 1317 is the retracement from just this most recent rally from 1238 up to 1365. And while it is true that we could see support come into the market, especially at this particular price point, as we get closer and closer to the deadline of Thursday, when the government effectively runs out of money and what they're going to do about it today as well as tomorrow. The key, as far as I'm concerned, is I still am perceiving this market in a bullish mode, because we are trading well above not only the 200-day, but the 50-day moving average. But most importantly, when we take a very long-term view of the market, going back to where the multi-year correction concludes, which I believe is definitely at the end of 2015, the beginning of 2016, when gold prices reached the all-time low after hitting its all-time high at $1,900 per ounce. Since then, we have seen the market trade to a much higher high than the previous high, with a higher low than the previous low. And then this rally here, although we've not taken out this current high, we've certainly come close to matching it. And during that period of time, we did have a sideways market, but in the big picture of it, we do see a series of higher lows. We just now need the final component, which is going to be a higher high, and traders, we're not that far away from that. And it is for those reasons, on a technical basis, I believe we will see gold continue to trade to higher ground. However, we first have to effectively end this current small and shallow correction that we're witnessing. As long as gold pricing does not dip below 1,300 before bouncing to the upside, I think that this rally is still 100% fully intact. And to me, traders, it is quite obvious that the end of the correction currently exhibited in gold will be part and parcel of when the dollar begins to once again weaken, because we have seen dollar strength over the last couple of weeks after finding some real support at approximately 88.58, which corresponds to a 61% retracement of this rather large data set from 78 up till 104. What we want to see is, will the dollar continue to trade higher but have a lower high than this previous high before beginning to track down to lower pricing? Because that is what we would need to see for this current rally in gold to continue. And therefore, traders, my recommendation is to maintain our neutral stance with no active trades in gold or silver and await some technical confirmation that this correction that we are currently experiencing in gold pricing has concluded. As I said, this is a logical place we could see that occur, the 38% retracement, but gold could trade as low as about 1,300, which is a 50% retracement of the most recent rally. Traders, today we focused upon the dollar and the fact that the dollar, rather than being an outside market, is an integral component of how gold is priced. Now, we can say that the dollar is influenced by many factors such as interest rates, perception of what the Federal Reserve is going to do, and things along that course. However, it's that effect on the dollar and how the dollar doesn't affect gold, but it's the fact that the dollar is paired with gold that gives it that dynamics. And therefore today, even though we saw the market move down considerably, it was 100% due to a change in the dollar, continued dollar strength. So by taking those apart and looking at where these outside markets actually occur and what they occur to, I think it gives us a more dynamic understanding of how gold prices change. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.